Alright, so question says, identify and evaluate ethical and professional issues. So let's have a look at the question then. You're a manager in the audit department of Carter, so Carter's the audit firm. You're dealing with several ethical and professional matters. And here we go then. So, Fenwood, they've got a year end in June 10. During this year, the company established a pension plan for its employees, and this year, the company will be recognising for the first time a pension deficit. Okay, in accordance with IS 19. The finance director of Fenwood has contacted the audit engagement partner asking if we can provide a valuation service. So, first of all, identify any ethical or professional issues. So, first of all, you think, right, well, the issue here is clearly self-review. But in the exam, it's not enough just to say this is an example of a self-review threat. You have to explain why it is. And you say it will be because we will be auditing a balance that we created, that we valued. Okay, so therefore we might not be as objective as we could be. So it's a threat to our objectivity. That's that bit explained. The next bit that you want to explain is the significance of the threat. Evaluate the threat. So the significance of the threat. Think about it. So you've got this figure on your balance sheet. How significant is it? And the obvious thing would be its size. How big is it, in comparison to materiality? But then there's other things, isn't there? If you were just valuing, let's say, I don't know, a car or a computer or something, it'd be quite easy for us to do because we'd just say, well, I know how much a new car is worth, or I know how much a new computer is worth. And so therefore, it would be quite straightforward for me to do it as the auditor, and I probably would do it. So what's the difference between that and a big pension liability? What is special about the car or the computer or something is because the car or the computer, you have something to measure it against. There is very little judgment or subjectivity. So the significance of the threat depends on the subjectivity of the item, on the judgment needed. Okay, and for those of you who have done P2, which I'm guessing is all of you or most of you, you will know that this is quite a judgmental thing. It's quite a difficult thing to do. So you would say pension has many variables. So therefore lots of judgment needed. So this would be indeed a very significant valuation. So significant, in fact, I would say that there could be no safeguards. And when we use the word safeguards, why? To reduce the risk, or reduce the threat in this case, to an acceptably low level. Okay, now, when we get to that stage, when you get to this one where you say there isn't any safeguards, you always want to then say, yeah, but what if it was small, if it was not material? Okay, if we could have safeguards, then what safeguards could there be? Okay, and you'd say, look, you'd want a separate team to do the valuation compared to the auditor. You just want the second partner to have a quick review over it, and you always try and ensure the client understands because they're responsible in the end for this figure. They need to understand how we've come to the figure, so understands the methods that we use, the assumptions that we use. They are ultimately responsible. Okay, and of course you need to make sure that we have got the skills necessary to do it. So the way we went about that, again, we explained the threat, we looked at the significance of the threat, and then we looked at possible safeguards that we could use. And that's how you go about getting your 6 marks, folks.